Hi, welcome to another edition of HPA Global Insights. We're here with a good friend, Brian Negley, U.S. advisor to early data. Brian, how's it going?
Very good, Jeff. How are you doing?
I'm doing great. So today you've prepared another amazing presentation for quarter four, 2003, quarter four dietary supplement, kind of industry, cross-border e-commerce. Looks good. It's still growing, right?
Still growing, yeah, over 20%. And we'll dive into the details, but no, it's still growing.
It's amazing. All right, well, let's get going. Get your slide presentation up and running.
Okay. All right. Well, I'm going to be talking about trends up to the end of December for the China online health supplements market. But first, I'll just introduce our company a little bit and give an overview before we dive into the actual data. So we are Early Data. We cover a number of leading platforms. Most of them are pasted here. Um, we'll be looking at actual market data, sales and shares and things like that. So the majority of these are we've been covering for a number of years. So these are for anybody in China, these are familiar logos. So this is what we'll be talking about. So these platforms, these are a number of our clients. We've got pretty good representation across the health supplements market with a pretty good mix of both domestic and international players. Um, the product we're looking at is what we call category monitoring. So that is basically looking at the total market size and then going under that hood, so to speak, and looking at, you know, segment performance, manufacturer and brand performance, all the way down to stored item performance. So we actually collect that at an item level and build back up. So when we look at the data, we just drill back down from market all the way down to item. Um, just in terms of China, I know a lot of people are familiar with China, but just in case you're not, just to kind of get everybody on the same page and level set. So the Chinese economy grew by 5.2% in Q4 and also for the whole year of 2023. Breaking that down a bit, China retail sales up a little bit over that 5.2% at 7.2%, with online even exceeding that 11%. So online's still relatively healthy in the grand scheme of the Chinese economy. Industrial goods, 4.6, services, 5.8, fixed asset management, 3. A lot of people know that the government's made a big point of focusing on what they see of industries in the future, as evidenced by growth of electric vehicles, plus 36%, and solar is really booming in China, plus 63% year on year. Property continues to be an issue in China, with a lot of the bigger property companies having financial issues or even going out of business. And the property sector in general is not good, both new and used. Okay. Um, Looking at health supplements, just to say that there is a big opportunity in this market. It is first and foremost a big market in and of itself. What we measure is 14 billion annually in sales, and we don't cover all of it. We cover the vast majority of it, but there's probably some stuff outside of what we covered that would bump that 14 billion number up. Point A. Point B, it continues to grow. It's growing over 20%, and the second half growth of 2020 is closer to 25%. Okay. Cross-border sales are big. The online supplements market has probably as big, if not a bigger percentage of cross-border contribution than almost any of the categories. So that makes it relatively easy for foreign companies to enter. They can go straight through cross-border channels. And Chinese consumers continue to support high-quality foreign health supplements. Okay. Um, Having said that, well, foreign manufacturers continue to do most of their business on cross-border for the reasons I just alluded to, about 75%. They actually did grow faster on domestic platforms in the second half of the year, and we'll take a look at that. Okay. Alibaba is a typical entry point, particularly Tmall Hong Kong, for foreign manufacturers because of its size and its reach and its ease of access, and they're still big and they dominate the overall landscape. But JD and particularly Douyin have grown faster. So foreign manufacturers should explore those platforms as well. Okay. Just on the data itself, the most recent period is December 2023. Douyin data started in June 2022, so a lot of the year-on-year stuff will be June through December versus June through December. We've got both domestic and cross-border. I've got all the names down there, and you'll be seeing them as you go through the presentation. So we've got most, not all, but most of the big names. Okay, so let's just dive into it. So it alluded at the top, the market's growing. It's continued growing about mid 20%. For anybody that's looked at past presentations, you've seen growth rates well over 20%, and those growth rates stay over 20%. Looking year on year without Douyin, because we don't have a full year of data of Douyin, it's 23%. Looking at 7 months versus 7 months, that growth rate is 25%. And again, there's that market size close to 14 billion for the year. Okay. Cross-border outgrew domestic. So again, all platforms growing 25%. Cross-border grew 30%, domestic 22%. So cross-border platforms outgrew. Okay. If we look at specific domestic and cross-border platforms, if we look at the left side of the screen, we'll see domestic platforms and their share of the domestic market. Tmall is the biggest, not surprising, the biggest platform at close to 27% of domestic share. However, their growth rate's only 2%, so they're below market. They're barely growing at all in a market that's growing mid 20%. JD, Douyin, as I alluded to before, growing faster, 35 and 32% respectively. Interestingly, Taobao domestic is growing well, it's 41%. Looking at the other side of the screen, cross-border platforms, cross-border again growing faster than domestic overall. Tmall Hong Kong growing more than the domestic counterpart, but only 17% versus an overall growth rate of 30%. So growing below that cross-border benchmark of 30%. Douyin Global doubled. Okay, and Kaola grew 51%. Okay. If you just look at total domestic versus total cross-border, those kind of over the past 6-month chunks, just to see if there's any change. Long story short, not really. Domestic has a little bit over 55% of the market. It's gone up and down a little bit over the past sort of successive 6-month segments, but not a big change. And then on the right side is that's a value bar graph on the left, looking at it on a volume basis on the right. Same kind of trend, meaning that not much change. The big difference is, though, domestic does a much bigger percent of actual sales volume. Okay, so value sales, pretty close, 55-45, let's call it, but it's over 70-30 on a volume basis. We'll look at price next. So because of the mix I just talked about, average price is higher on cross-border. The chart on the left shows prices for all platforms combined. So there's a bit of a bump up going from 22 to 2023, a little bit over 6%. Average price at the end of 2022, 116. Then it's gone up to 123.6 and slightly down second half of the year, 122.4 for the total market. Then if you split that domestic versus cross-border, domestic on the top right, prices below 100. So they're well below cross-border and the overall average, up 4.2. Cross-border platforms average prices, because the package mix and just it's really different. It's a different set of products as well as different consumer mix. Those prices are up 6.7. So the absolute prices on cross-border are bigger than domestic and more of a price increase. Okay, so that's an overall look at the market. Market up, cross-border outgrowing domestic, and prices overall up and up more on cross-border than domestic. We'll look at manufacturer shares and growth next. Okay, so these are the top 10 manufacturers and their shares last 7 months of the year. So H&H Swiss brand is first, by Health second, and so on and so forth. And then their growth rates. Again, keep in mind the overall growth rate of 25%. So top 2 manufacturers, H&H and by Health, did outgrow the market of that 25% benchmark, slightly over 30. But the ones that really grew are down the list. NA and GNC, both more than doubled over the last 7 months of the year. Splitting those shares between cross-border and domestic. Cross-border on the left, Swiss market leader on cross-border, but they only grew 14%, so below the benchmark. They actually grew faster on domestic. Their shares much less down, but they've made inroads on domestic platforms over the past year and a half. But there's NA and GNC. So they're almost exclusively on cross-border, and there's those big growth rates. Looking on the right, there's the top 5 manufacturers. They're growing, but interestingly, none of them are growing as fast as the overall domestic growth rate. So the brands that are growing the most on domestic are lower placed down the list, so to speak. Okay. And just a quick look at GNC sales on some of the key cross-border platforms. Tmall Hong Kong, even though Tmall Hong Kong not doing well, there are selected manufacturers that are doing well. Here's one. And you can see the big spikes in promotion, promotional periods, the 11/11 periods and the June 2023 periods. Tmall Hong Kong, very promotion driven, much more so than the other cross-border platforms. You can see steady successive increases on JD Worldwide in the red, and then Douyin Global, especially like the last 5-6 months, in the green. Same thing for Inne, looking at their sales. Again, growth on Tmall Hong Kong, but again, very promotion driven. Whereas you can see the red line JD Worldwide and Douyin Global up, especially kind of the last 5-6 months. So those red and green line have drifted up. So that's growing on all 3 platforms, but more consistent, less promotion driven growth on JD Worldwide and Douyin Global. Okay. Looking at foreign manufacturers as a whole, these are the top 20 highest selling countries, which is basically almost all the foreign manufacturers combined. First off, where do they sell? Okay, not surprisingly, they do the vast majority of their business on cross-border. What the pie chart on the left is saying is foreign manufacturers sell about 3/4, 75% of their sales come through cross-border, 25% on domestic. So 25% is relatively small, but it might be bigger than you would think. Okay, point A. But point B, interestingly, and a bit counterintuitive, is that foreign manufacturers, even though domestic's only accounting for a quarter of their business, they're growing faster on that. So that residual 25% that's growing at a faster growth rate. So the takeout here is there are opportunities on domestic platforms for foreign manufacturers that are willing to go through the extra steps to get on those platforms. Okay. And then just keeping within those top 20 foreign countries and looking at platform by platform, what percent of the sales do they account for in the growth rate? So again, we're looking at basically all foreign manufacturers or close to all foreign manufacturers. The chart on the left is showing share of foreign manufacturer sales for those platforms and the growth rate. So taking Tmall Hong Kong as an example, foreign manufacturers do about close to 27%, 26.6% of their business on Tmall Hong Kong. That's going to be the typical entry point for a foreign manufacturer. Fine. However, growth is negative. So what kind of one thing I said at the top was it's a common entry point for foreign manufacturers is Tmall Hong Kong. Nothing wrong with that. As we've seen with both GNC and Inne, you can grow. But there's a lot of manufacturers that have negative growth on Tmall Hong Kong. And again, foreign manufacturers as a whole, growth is negative, almost -3. JD Worldwide accounts for 17%, not far behind Tmall Hong Kong, and growing foreign manufacturers are growing 30%, growing much faster. Douyin Global, the big one. Okay. There's probably a lot of foreign manufacturers that sell on either Tmall and or JD Worldwide that are not in Douyin Global. They're missing the boat because Douyin Global is growing really fast for foreign manufacturers, well over double, 140%. Taobao Global down. And then looking on the right, that kind of carries on. So again, domestic platforms, only account for 25% of foreign manufacturers. So those numbers are going to be smaller. JD accounts for 6.6, and then followed by Tmall. Tmall is negative. Okay, so even for foreign manufacturers. So growth for foreign manufacturers on JD 16%. Taobao and Douyin growing the fastest, highest. Okay. Last, I'll look at growth of key segments. So just slicing the market another way, immunity and liver health are growing the fastest. The growth rates, the sales numbers are on the left axis, the growth rates are on the right. And as you can see, both immunity and liver health are growing faster than the market, growing quite healthy, even though they're smaller relative to some of the other ones. Gut health is number 2, but the growth rate's pretty flat. It's not really growing at all. So again, in a growing market, they're actually losing share. Okay. Looking at subcategories, and just in the last quarter and splitting that between cross-border on the left, domestic on the right, Vitamins growing fastest on cross-border. Okay, 25% with some of the top brands listed right there, Swiss GNC, et cetera. Liver health also growing fast, almost 50% at 45%, in the top three brands there. Looking on the right at domestic platforms, gut health, that we noted before, is down, and it's down particularly on domestic where it does well. Sports nutrition is doing well on domestic platforms. Immunity is doing well with some of the respective top brands listed out there. Okay. Now slicing another way, looking at which ingredients are growing the fastest. Okay, ranked by size. Okay, so calcium at the top growing pretty well at 23, a little bit below market, but close to market. Probiotic below market. We've seen that for a while. Probiotics is growing, but it has been growing at the market rate for some time now. DHA growing pretty well, but the ones that are growing fastest are circled. Okay, so fish oil is growing the fastest, even though it's kind of middle of the pack in terms of this chart. Protein and multivitamins also outgrowing the market. Okay. And just look at a couple of other things quickly. Format, which some manufacturers or ingredient suppliers are interested in. Just key takeouts in terms of the splits. Capsule is big on cross-border, accounting for over half the volume, whereas it's only 5% of domestic share in the respective growth rates. Not growing that fast, but capsules really outsell just about every other format on cross-border, whereas powders account for almost 3/4 of the volume on domestic platforms, and higher growth rates, and the others are relatively minor. So that's probably to take out there. Okay. Final slide, just to make a point, kind of drill down to some specific brands. And I realize a lot of this is in Chinese, but these are just some of the top probiotic brands. And probiotic, we know growth is slower, but it's still a big focal area for a lot of manufacturers. But this just shows how focusing on consumers in terms of branding, labeling, and I realize a lot of this is in Chinese, but the word clouds are taken from comments. It just shows that consumers really react well to good labeling and good, good targeting toward consumers, because there's some overlap, but there's some also key differences for any of your audience. Academy, Chinese, it just shows there's a distinct marketing segment and all these brands are after, and these are the top 5 brands. So it pays to know your consumer and market toward them. Okay. That's it. So I'm going to summarize what we just looked at. So again, to go back to the main point, online health supplements growth. Okay. 25% for the last 7 months of the year, really a strong market in compared to the overall Chinese economy. Okay. And there's those numbers for the total year without Douyin and with Douyin in the last 7 months. Okay. Cross-border grew faster, 30% versus domestic at 22 and 8% gap. Douyin global, really a fast grower, doubling sales. Okay. Average prices up in 2023 on both domestic and cross-border, a little bit up more, a little bit more on cross-border. Okay. Leading brands, the top 2, Swiss and By Health, did outgrow the market by a little bit, but the ones that really grew were down the list, GNC, INE. Okay. Already mentioned that. And they grew primarily promotional periods in Tmall Hong Kong, but also steady growth on JD Worldwide and Douyin Global. Okay. And we also looked at cross-border platform contribution to foreign manufacturers. About 3/4% of the sales for manufacturers do come from cross-border. However, foreign manufacturers did grow faster on domestic platforms, not Tmall, but Douyin and Taobao. And the last we looked at was segments and ingredients. Liver health and immunity led the segment growth. Probiotics has slowed down. Gut health below the market, but liver health grew steadily, almost doubling, and then immunity grew 50%. Okay. Fish oil, multivitamins, and protein also grew. And that's it. And any questions or follow-ups, please follow up with me at the email address below.
All right. Thank you, Brian, very much for that in-depth review. We're seeing some regulatory influence on those numbers, meaning that back in the day, you would have saw a lot more foreign manufacturers of supplements on cross-border only. very few entered into that domestic market. So we're seeing some influence in their regulations continuing to change over time. Whereas they have the recording process, which is a little bit cheaper and a little quicker to get certain products approved for China. So you can see some companies that have been in the market for a long time are now having products getting the registrations and getting into those domestic channels. And also, you had mentioned capsules and powders, which is interesting because capsules on cross-border would be much higher, as you noted in your presentation, and domestic powders. So I think regulatory wise, it's a little easier to take a product and put it in a sachet as a powder, as long as the ingredients are food-based ingredients, and you can sell them in the China market without getting a registration. So it's very easy to understand from a regulatory point of view why powders would be domestically a lot higher than capsules, because capsules are more considered like a medicine, or definitely need a registration for the health product to be sold, which costs a lot of money to do. So it's very interesting to see over time those sales projections that you show us are changing a little bit over time. All right, thanks again very much, Brian, for that presentation on Q4 health supplements in China. Look forward to the next report in a few months. And until next time, take care. Thank you for joining us. And if you haven't, please do subscribe to this channel so you can get the latest videos that we're putting on there. And it really helped the channel a lot. Appreciate it. Thank you. Take care.
Thank you.
Thank you for tuning in to HPA Global Insights. Please like, subscribe, and share with your colleagues. Any questions or suggestions, email us at info@uschinahpa.org. This channel is operated by US China Health Products Association, which is a nonprofit organization. Please consider joining the association and supporting its global endeavors. Your support is very much appreciated. Until next time, take care.